Twister at the top there. What did you make of the session?
It was a bit of a disappointing session, James. If we have a look at the market, there wasn't a lot of leads to start off our market with. We saw the US market close for Independence Day, and if we have a look at Europe, gains there were capped by weakness in the banks. But our market seemed to look towards China. A couple of media reports that we could see a rate hike in China as early as this weekend, and that kept the gains on our market quite muted. In fact, we saw a fall on our market. We were also watching that RBA rates decision, and we saw rates stay on hold as expected, but a more subdued growth outlook coming through from the RBA. And of course, we also saw Moody's coming out to warn of weakness in the Chinese banks. So if we have a look across the market, we did see most sectors falling. The worst sectors were the healthcare and the information technology sectors. A couple of broker upgrades and downgrades also coming through. We saw UBS keeping its neutral rating on Macquarie, but downgrading the 12-month target down to $34, but Macquarie shares had already been trading below that. Citigroup also coming out with a buy for Santos, saying that it's being priced for failure. $16.36 is a target there, but it didn't seem to help Santos' share. Lynas in the spotlight today. We're seeing Mitsubishi UFJ take a 9.99% stake in the company, so that stock was up by 0.5%, but altogether the market down by 0.3%, and volumes extremely light, only 3.8 billion being traded today.
Before we get to some of the market, talking about those CPI numbers and interest rates still in China, Julia, and growing concerns over their banks. Look, what's driving the worries?
Look, this is a very big story. We've already seen the Chinese government with a bailout for local government debt, and if we have a look at local government debt, we've seen numbers coming out today from the National Audit Office estimating that debt at 10.7 trillion yuan. Now, to give you an idea about the size of this debt, it represents about 27% of last year's gross domestic product in China. And of course, this amount of debt is mostly held by Chinese banks, and this debt is seen as bad loans. So if we have a look at that 10.7 trillion, Moody's today coming out to pinpoint a number saying about 8.5 trillion renminbi is held by local banks. So a negative there for the banking sector. But Moody's also saying that, you know, 3.5 billion, there's another 3.5 billion yuan worth of local government debt out there that hasn't been identified by this report, which is unaccounted for. So this local government debt, a key concern. Moody's saying that it could lead to a weakening in terms of outlooks for the bank because there's no master grand plan to deal with these bad loans. So I guess the Chinese banks very much in focus. There has been talk about this for a number of years, but I guess it's only this year that we've seen the government trying to make little moves to deal with the problem, and Moody's today coming out with a warning.
What did you make of Murchison? Savaged today on the market.
Absolutely savaged. Yesterday we saw Murchison falling 2%, and today the analyst downgrade started to flow through. So this stock was down a massive 23.3%. In fact, we saw Murchison Metal shares trading at the lowest level that was seen in more than 2 years. Now, yesterday we heard from the company. We've seen cost blowouts at its Okajee port and rail project. Originally, the initial costs back in 2009 were around about the $3 billion mark, then $4.4 billion, and then last year the preliminary estimates were at $5.2 billion in November, and then of course yesterday we heard that it would be about $5.9 billion. It wouldn't be until the earliest 2015 until we saw the first train of iron ore or cargo using that infrastructure. So altogether it was a negative today. We did see Citi come out and slap on a sell with a 41-cent target. We saw I guess a little bit more of a better recommendation coming through from Goldman Sachs with a 75-cent target with a hold. The share price closing somewhere between there. I guess the negatives are the cost blowouts. Secondly, there was a report in the Australian Financial Review today in Street Talk saying that Mitsubishi, if they were to buy the Jack Hills project or the 50% stake of that project that Murchison Metals currently owns, they'd be looking to pay no more than $500 million. So around about $400 million to $500 million. Most analysts have a target or a valuation price of about $2 billion on this project. So that was seen as a key negative. And of course, this infrastructure, if it does come online in 2015, then it's probably going to be at a time when we do see a lot more supply of iron ore coming to the market. We know Fortescue Metals is looking to ramp up its project in the Pilbara region, Rio Tinto as well as a number of big iron ore projects overseas. So by the time this infrastructure comes online, it is quite possible that we're going to see an oversupply of iron ore in the market, and of course prices dropping in terms of iron ore pricing. So a lot of concerns in regards to Murchison Metals, not only the Oakajee Port and Rail project, but also Jack Hills.
Yeah.